Be Wealthy and Smart, episode 1214.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the June correction that's continuing into July. Now, I know the market is up strongly, and even with reduced hours, the S&P and the Dow closed higher, and the Nasdaq was slightly lower, down 0.04%. But what's happening really is we started the correction in June, and after a brief pullback, the shorts have covered, which has led the market higher. But what that looks like to me is that we're still overbought, and we need to have about a 10% correction. When you look at charts, it looks like the rally's a bit overextended, and through Friday, Nasdaq had its biggest half-year gain since 1983. The Nasdaq was up 31.7% in the first half. That's the best in 40 years. The S&P 500 was up 15.9% in the first half, and that's its best half since 2019. And the Dow Industrials were up 3.8% in the first half. Remember how last year, during the correction, all of the media was telling you to buy the Dow stocks? Well, if you had, you'd only have a 3.8% gain right now, versus 15.9% with the S&P 500, 5 times better. But what's really astounding is the NASDAQ 100. The largest 100 companies in NASDAQ have had their best half-year gain ever on record. And the reason for that is artificial intelligence. If you listened to my last podcast, you heard that I believe artificial intelligence is going to give a boost to the market through the end of this decade and beyond. But that doesn't mean it's going to happen right now. So I want to be clear that I did say we've started a correction in June. We've now had sort of a head fake here. I do think we're going lower once we've moved enough in the opposite direction. There are 76 stocks in the S&P 500 that have had fresh 52-week highs. And again, many of those companies are the biggest of the big, the mega cap stocks, as I talked about in the last podcast. Because I believe AI is going to be like the dot-com boom plus the Y2K boom put together. People are going to have to buy new equipment, which is going to fuel technology, but they're also going to be putting AI strategies to work. And that is going to make companies more profitable, more lean and mean. So over the long term, I think it's good for corporate profits. In the short term, however, they are going to have to make some capital investments. When we look at economic numbers, the ISM manufacturing report for June was below 50, which signals a decline in economic activity. So we have some signs of economic weakness. We also have the lowest inflation numbers in 2 years. So we are seeing that lag time that I talked about of about 18 months after the Fed started raising interest rates, we're starting to see that now that the lag time window is closing, we're starting to see inflation come down. And we still have an inverted yield curve. We have the 10-year Treasury today at 3.85% and the 2-year Treasury at 4.95%. So when you have higher yields on shorter-term Treasuries, that's an inverted yield curve, because normally we expect higher yields in the distant future and lower yields closer to today. So if you have a 2-year yield that's higher than a 10-year yield, that indicates that the market thinks there's some kind of a recession coming in the future. Although it's not a very accurate indicator, and an inverted yield curve has predicted many recessions that never happened, so it's just one of many indicators that we look at, and I don't take it too seriously. So right now, I think people are getting some fear of missing out, and people that haven't been in since the October lows are now seeing the returns that they missed out on, and they're jumping in now, which is probably a short-term top as we continue the June correction that we started and come back closer to that 50-day moving average. But again, I'm very, very bullish long term. I don't think this correction is going to take us to new lows. I think the October lows will hold, and we are in a new bull market. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.